Let's take a look at some information charts on Synthetix for BraveNewCoin. So Synthetix is a lending and borrowing platform, at least in my book. They view it as a derivatives liquidity protocol, but it essentially functions very similar to Maker Comp Aave in that regard, in that you're basically loaning out something to create a synthetic. Now, the difference here is that you need SNX to mint your synthetic token or to get your loan. That certainly helps the token in that it gives it a baseline use case. Whereas Maker Comp Aave, those tokens have a governance use case, just as Synthetix does, but it doesn't have necessarily a built-in use case. Now I'm not saying that's a justified reason to have a token, but it certainly has helped the token. It also hurts the token because if all of the underlying is one asset and that asset is volatile, then you're going to run into issues very similar to what Maker ran into with DAI early on and having a single collateral DAI with ETH being the solo underlying. If your solo underlying collateral is extremely volatile or is extremely negative on one day and people don't collateralize to the level required, then that's going to waterfall cascade price. Okay, we'll get to that when I talk about TA, but fundamentally the idea works. It's just on the edges, on the fringes, when stuff happens, when crap hits the fan, then you run into issues. Now there are minting fees here. A lot of these synthetics are non-crypto as well, which has their own legal issues, regulatory issues. They did have at one point inverse synths, which don't appear to be available anymore or unavailable. What those did was track the inverse of price, so effectively allowed you to short. Even though those don't appear to be available, when I go to the stats page, I see that they're listed down here somewhere, if you don't mind me scrolling. Yeah. Looks like there's a massive on-chain ETH short relative to the ETH longs here, and it's negative 208 million if I'm reading this correctly. So that's how the synth stuff works. Very simple, which is good. You don't want super highly complex stuff like the Maker vaults. To me, that's, if there's a competitor that's simpler to use, people are going to just use that, right? Path of least resistance, assuming there aren't, all things being equal, right? The UI is a thing. It's not like super pretty, but it's there, and you can use it. You can also stake your SNX. There's a governance component. There's a layer 2 component. The layer 2 stuff in general is probably pretty early, but you can earn a yield on layer 2 stuff here. If we look at the stats, for me, the most important part is always the user numbers. So if it's a DEX or a DEX-like, what is the volume? What is the borrowing? What is the lending? What do the liquidations look like? Where is that happening? Quenta, which I still don't know what that is exactly, but it looks like a lot of this is happening on Curve, D-Hedge, Enzyme. Hey, I know that one, 1 inch. But the trading volume has tailed off extremely flat. It's probably the flattest it's been since earlier in the year. So it's hard to get super bullish on that in the near term. Now, if this starts to curl up, you can say, all right, then I'm bullish again. The number of trades as well, not zero, right? But it's certainly declining. It's going in the wrong direction. So you want to see this increasing. And then the next thing I look at for this type of platform is, as I scroll down, where all of the stats are sitting. So it looks like a majority of this is actually sitting in ETH shorts or other collateral. Again, I don't know how, it must be available on platforms that I don't use or can't use, but I don't know how this is functioning if inverse ETH is unavailable. They also have binary options, which aren't normally legal in many places because of regulatory stuff. So they're just kind of doing whatever they want to do. You can look at TVL, we can look at fees and PE ratios, which we'll do as well. If we look at the contract interactions, that has also been kind of flat according to the bank over the past couple of months, and users flat and declining. So it's hard to get like baseline bullish on price when you're seeing declining numbers here. And people like the SEC wanting to go after stuff like comp. SNX is 100% in the crosshairs because of its synthetic stock stuff. UniSwap delisted all of the synthetic stock stuff. So whether or not the team is in the US, whether or not it's available to US people, like these are all important things to know. But bottom line, any regulatory action preventing users on a platform is going to be bearish for price in the near term. That's just simple as that. If we look at the token stats on chain for SNX, transaction counts again trending down, not something you want to see if you're bullish. and average transaction value is just kind of flat. Mini peak here, but as long as ETH fees are incredibly high on chain, stuff like SNX is going to take a hit if most of the volume is layer 1 and not layer 2, or if layer 2 is hard to use. These are all things to consider when you're looking at DeFi, because you're just pricing out a majority of people. I mean, it's painful for me to use Enzyme. That's how expensive ETH fees have gotten. Maybe to transact ETH from wallet to wallet, not such a big deal for most people, but to actually use DeFi and use the EVM stuff to use the world computer is incredibly expensive. For instance, to mint the synths in and out, I'm guessing is incredibly expensive here, and that's playing a prohibitive role on the stats for on-chain activity, the stats for the platform, and that's just going to continue to decline until ETH fees start to relax a little bit. NVT, inverse metric of economic utility relative to price, is low historically, but slowly rising. And active addresses have plummeted from over 3,000 to under 1,000 since the beginning of the year. So it makes sense to me why price is as weak as it is, despite having strong technicals potentially with that ascending triangle, which I'll get to, because the on-chain stats are just void of all activity relative to where they were earlier in the year. January, if we flip gears to MVRV versus price, MVRV is another inverse metric of market cap versus on-chain activity. But since January, MVRV has declined significantly, as we saw an uptick in on-chain activity relative to market cap. Now MVRV sits at 1. For most coins that aren't DeFi, anything above 2 is sell zone. And it's still probably too early to figure out what MVRV needs to be on DeFi in order to be a buy signal or sell signal, but you want to see MVRV declining. That just says on-chain activities picked up. I mean, MVRV was over 47 when it first launched, and it's continuing to decline and find its equilibrium. So I don't think it's a useless metric. I still think it's worth looking at. But you're going to need to dial in over time. This will take time to figure out, is anything above 1.6 a sell zone? Overbought territory? Is anything above 2.5, right? The more data and history we get on chain stats relative to price, the more I'd feel comfortable trading around it. Right now, it's probably a little too early, but it's worth continuing to look at. Now, like I said, they also have a governance component, which generally most people don't really care about. Let's be honest, but it does exist. It's there. If you look at the PE ratio equivalent, or market cap versus annualized revenue, SNX is currently on the wrong side of the curve as far as being overvalued on market cap relative to revenue. Most of the time, you want to be buying stuff on the left side relative to the right side. This says it's undervalued or being used relative to its market cap. This says the market cap is several multiples above what the protocol is actually pulling in if it's a yield generating asset. Flipping gears to technicals, like I said, that this Adam and Eve, this ascending triangle, whatever this could have been, looks worse and worse over this past couple days as it breaks lower lows, breaks diagonal support. So this potential is probably nullified on the chart pattern at this point in time. If anything, you could say there was some sort of shoulder head, shoulder nonsense, right? But this still looked pretty good for eventually breaking 17 to 20. I don't know if other layer ones stole the thunder. I don't know if ETH fees prohibited this stuff. I don't know if regulatory concerns prohibited the big boys from rotating in, everybody with capital. But maybe it was a collective amalgam of the three. This thing could not break out relative to everything else. Even still, on trend, it looks okay. It's still above yearly pivots that it needs to be above. It's still within the VPVR ranges of basically 10 and 20. It's still above psychological support. It has a pending bullish 5200 cross. This doesn't look terrible. It just should have broken out and didn't, right? It kind of looks like it did here, where it just took its sweet old time, eventually crossed, and you get a big reaction out of that. Because momentum is basically zero, this is setting up for the potential, again, for another type of bull run where all the bearishness is gone, all the bullishness is gone. There's fresh trend ready to be laid down, those tracks set for a move to the upside. So if this does flip bullish, I still like 20. I still like 20 plus. I still like all-time highs. But that means ETH fees go low, layer 2 works, and regulatory actions don't destroy maker comp on the SNX, right? Like that's really the big concern for all of DeFi in the back of my mind right now. On the cloud, this looked like it was setting up for this edge to edge to 1650, whatever this is. It's still technically active, but you don't want it breaking below the cloud. Definitely doesn't look super healthy sitting there. And the 12-hour looks ready to roll over, which is not a bull sign. And if you're waiting for long entry conditions, you're basically waiting for whatever it looked like in November, December 2020, price above the cloud. TK line's bullish, right? This, again, this setup for a potential move up didn't happen. They don't always happen. It is what it is. And now you're waiting for the next setup to look extremely similar to both of these pre-breakout. SNX BTC, giant ranging mess since mid 2020, really. I don't really see a trade here. If anything, it looks more bearish than bullish. Maybe this thing Adam Eves eventually. It did a very similar slow roll here where it definitely Adam lefted, as the kids call it. Adam left the V, and then it eventually curled up and went for the highs. So this could take us to the end of Q4 to like figure this out if this does move, but it isn't something that I'd actively be paying attention to right now. You know, I'd set alerts probably around 29 to 30K sats and just kind of forget about it in the meantime. And against ETH, it looks bearish enough to the point where it's definitely oversold on RSI relative to where it's been since May. It's putting in multiple bullish divergences every month: May, June, July, August, September. This is a multi-month bullish divergence here with a bunch of volume at the lows. So if ETH fees can stay down whatsoever, I like this play against ETH. But it's almost as though EIP 1559 is this new DeFi thing on the block where, for whatever reason, fees are higher than they were, seemingly, if it's NFTs, whatever it is. And that is just crushing these DeFi relative pairs. So I think SNX is fine as a platform. They have some issues fundamentally being solo collateral underlying. They have some issues regarding regulatory risk, but I don't think they're going anywhere anytime soon. Price is still setting up for a potential Q4 bull move after a failed chart pattern that had been forming on the USD pair over the past few weeks. Lastly, I'll just mention the ETH BTC fund and DeFi portfolio I trade for Techme Capital and Enzyme.finance, a non-custodial portfolio management solution where you can send ETH or USDC or just watch what I'm doing. You can see everything, including AUM, performance, allocation, all the yield plays I'm making here on Comp and Yearn, as well as Aave. And you can see we're holding SNX 12% allocation currently and collecting yield on that as well. That's all for this one. Like, dislike, comment, share, subscribe, and happy trading.